This is going to be a walkthrough of Edexcel paper 1, the short answer from this paper, which is the June 2018 paper. My recommendation is that you go and do the short answer from this paper yourself, and then come back and watch the video and see how you did, so we can sort of compare answers rather than just passively watching the video. But we'll get started. So question 1 here says, this diagram refers to the production possibility frontiers for a country that produces capital goods and consumer goods. Originally, the economy has a production possibility frontier shown by the line XY, so that's this sort of line here. The production possibility frontier then moves to XZ, so that's that line here, operating at point U. Okay. Okay, so we're moving from operating at point V to operating at point U. Calculate the original and new opportunity cost of producing 50 capital goods. You were advised to show your working. So the 50 capital goods here is in line with V and U. What this suggests then is that we are going to be comparing the opportunity cost of choosing to produce those 50 goods with the amount of consumer goods we have to give up in order to produce that 50 capital goods. So for our original output, we are going to compare this situation at Y, where we were only producing consumer goods and we produce 120, with this situation at V, where we're producing 50 capital goods and 100 consumer goods. So that means that our opportunity cost in terms of consumer goods for producing 50 capital goods is going to be 20. So we subtract 100 from 120. That's the original. I'll say OG. Don't write OG, write original when you actually do the test. So over here then we have Z on our new. At Z, we're producing 170 consumer goods and 0 capital goods. And then we're going to subtract our number of consumer goods we are producing when we have 50 output, which is 140. So that's going to leave us with 30 consumer goods. And those are going to be the respective opportunity costs. B says, which of the following is most likely to cause the movement of the production possibility frontier from XY to XZ? And we've got 4 options. Option 1 is a reduction in unemployment in consumer goods industries. So this is not going to be our answer. And the reason this is not our answer is unemployment doesn't change the position of the production possibility frontier. What unemployment would look like maybe is if we were producing below the line. So I'm just going to move this a bit so I can draw. If we were producing, say, here, that would indicate unemployment because there's a gap between what we can produce and what we are actually producing. So unemployment is not going to cause the answer to this question. B says a rise in the cost of producing consumer goods. Again, not relevant here because a production possibility frontier shows our potential output and not the cost of producing those goods. So, we have a certain number of resources available. How much it costs to produce the goods doesn't matter. What matters is how many goods can we produce with the resources that we have. C says an increase in demand for consumer goods, again, isn't going to move our production possibility frontier. That might inform our decision to produce more consumer goods or capital goods. Basically, our decision to move along the production possibility frontier, say from here to here, that would indicate maybe our decision to produce more consumer goods because there's more demand, but it's not actually going to move the curves. Finally, D, which has to be our answer now, is a technological improvement in the production of consumer goods. The reason this does move our production possibility frontier is an improvement in technological production allows us to produce more goods with the same resources. And ultimately, that's what our production possibility frontier is illustrating, is how much of each good can we produce. So this suggests we are getting a bit better at producing consumer goods, and we haven't really improved our ability to produce capital goods. Finally, question C says, explain one characteristic of the economy at position W. So W is here. So you'll notice this is not on either of the production possibility frontiers. This is a 2-marker. In this case, and in most cases, 2-marker means one knowledge, one analysis. So I would say just identifying what is happening at position W will give you your knowledge. Your analysis is explaining this answer. So the answer is going to be W represents an, let's say, an inefficient allocation of resources. And I'll say, like, as the PPF represents optimum potential output of various goods. A point below the PPF is an underuse or an inefficient use of existing resources. So perhaps caused by unemployment. This is maybe a little bit more than I actually need to say, but I want to be thorough in answering the question, right? So I've identified what is happening at W. I've identified that it's an inefficient allocation of resources, and then I've kind of explained what that means in the context of what a production possibility frontier is, and also like one possible explanation for why this is an inefficient allocation of resources, which would be like unemployment, not using our full workforce. Question 2 reads, the number of individual weekly ticket sales from the UK National Lottery games operated by Camelot, 73 million in the financial year 2015 to 2016. The sale price of each lottery ticket was £2. This figure included a 24 pence tax revenue on each ticket sold. Okay. Calculate the weekly revenue received by Camelot after paying the tax to the government. You were advised to show your working. Okay, so we could get an idea of the total overall revenue by calculating the price of each ticket times the number of tickets sold. And that's going to give us 146 million pounds, right? So this is going to be total revenue. And you'll notice I've not factored the tax in yet. So I'm going to want to do that now. So 0.24 times 73 million is going to be 17.2 million. And then I need to subtract those numbers together, right? So I need to take 146 million, remove 17.2 million, and then that's going to give me 128. Sorry, this should be 0.52. Sorry, I put that calculation in wrong. 0.48 million. And that's going to be my answer. Now, with these, you always want to make sure you're writing it out with the pound sign and with million written out like this, just to make sure you get all the points. They'll accept a range here. They'll accept like 128 to 129. So you don't have to be like precise. If you make a little bit of a calculation error or you don't round it correctly, that's generally going to be okay with these. Research conducted by HMRC estimated the cross elasticity of demand for using gaming machines to be 1.28 in response to the changes in the price of national lottery tickets. Okay, interesting. In October 2013, Camelot increased the price of national lottery ticket from £1 to £2. Explain the likely impact on the price increase of national lottery tickets on the demand for using gaming machines. Okay. So I would say, first off, we can see that £1, and we're not required to do calculations here, but I am going to do some. Just to, £1 to £2 is an increase of 100%, right? Effectively, you're doubling. So you're adding 100%, you're adding on to the price. I would expect then that, given this is a positive cross elasticity of demand, that means when the price for one good goes up, the demand for another good is also going to go up, I would expect a 128% increase in the demand for, what do we say, gaming machines. I will improve my handwriting one day. So this is, I mean, we're getting 1 point for knowledge just for correctly answering the question, which is to say that gaming machines are going to go up. I might also highlight, just because we're going for 2 points, I'm also going to highlight, and we should get those 2 points for doing this calculation as well, just to sort of back up our point. Technically, this should be enough to answer the question for 2 points. I'm going to expand it a little bit, though. I'll say gaming machines and the National Lottery are substitute goods, as they have a positive cross elasticity of demand. And I also want to point out they're also elastic. This relationship is elastic. And again, like, you don't strictly need all of this information to get the 2 points. I always like to add some stuff just to ensure that you're getting both of those marks. It doesn't take me very much time to point out that it's elastic, that those are substitute goods, and it's just going to make it a bit more likely that you're credited for both points, depending on how your examiner is feeling. In 2016, a coastal flood defense scheme was completed at Broomhill Sands in Kent, protecting people, homes, and businesses. A £30 million grant from the National Lottery paid for the scheme. The most likely reason for this grant is to ensure it's a coastal defense scheme. So the exclusivity of Broomhill Sands, probably not. There's no reason why this is necessarily making Broomhill Sands exclusive. It might be making it more desirable, but it's not sort of preventing people from accessing it. The provision of a private good, I would argue this is not a private good. It doesn't sound like something that's owned by the private business, and by sort of charging like consumers, it's non-exclusive. The provision of a public good, this is correct. The reason this is a public good is, one, it's non-exclusive, so I can't prevent a business in the community from benefiting from the fact that there's flood defenses, and it's also non-rivalrous. So just because I benefit from the fact that there are flood defenses doesn't stop my neighbor or diminish my neighbor's ability to benefit from that flood defense. It's going to help everyone it covers. There's no kind of competition really over this as a good. There's no exclusivity. The rivalry of Broomhill Sands. Yeah, I mean, this is just kind of a red herring. It doesn't make much sense as a statement. I think they're trying to confuse you with the non-rivalrous condition for a public good. Rivalry doesn't really mean much of anything in this context. Question 3 reads, the average fee charged by high street agents to homeowners for selling property is 1.3% of the final sale price. Assuming the selling fee is 1.3%, calculate the payment received by an estate agent for a property sold for £489,000. Very strange question, this. I don't know really what they're testing you on. You're just going to multiply 1.3 times 48,900 divided by 100, and you're going to get £6,357. And that's your answer. No idea why they're asking you this. I don't know what it's testing really from the curriculum, but there you go. That's how you answer it. In August 2016, the Office of National Statistics reported that the average house price in London was £489,000, whereas in the northeast of England, it was £127,000. The ratio of the average house price in London to the average house price in the northeast of England is... Okay, well, so the average house price in London, so it is going to be it's going to be greater than 1, right? So I can exclude A. And then I can do the math if I want, right? I can literally divide these. But like I should be able to roughly figure this out, right? Oh no, these probably are too close. I should just divide them. So 489,000 divided 127,000. If you don't want to do the calculation, it's definitely not 7 times, right? Because 7 times 127 is going to be something like 900,000, something like that. These two are close. It is going to end up being 3.85. So C. But again, if you're really tight on time and you're doing this question, you can often just exclude 2 pretty easily and not have to do the calculation. And then you're just taking a 50-50 chance. C says, explain one likely reason for the difference in house prices between London and the northeast of England. Okay, so I mean, possibly the most obvious explanation would be there are differences in income and wealth between London and the northeast. This isn't going to be enough alone. I mean, this is technically an answer. This will get you 1 point. You are going to then have to explain what this means, why this affects things. So I might say like better job prospects in London would be my explanation for why there's a difference in wealth. Leads to higher wages. But the really key part is this, is pointing out that people with higher wages can obtain higher mortgages. So there's more demand. And consumers are willing to pay more. Willing/able to pay more. For houses. Okay. Question 4 reads, Emily owns and operates a nail ink salon. The diagram shows the cost and revenue curve for treatments in her nail ink salon or at her nail ink salon. Initially, Emily sets her price to maximize profits. We can see a sort of cost and revenue diagram here. This is looking like sort of monopolistic competition. This looks like short-run monopolistic competition because I can see generally we're going to be making a profit. Our average cost is below average revenue. So initially she's setting, calculate the change in supernormal profit. If Emily changes her objective from profit maximization to revenue maximization, you're advised to show your working. So based on the way they've set this up, I think they mean like an increase in your output and from 25 to 36. Given those are the numbers they're giving us, there are other points that might represent revenue maximization. I'm assuming that they want this as our reference point for revenue maximization. The profit maximization position is going to be 25 because that's where marginal cost equals marginal revenue. And also just because I think you can see that there is a supernormal profit being made here. So the first thing I'm going to do is I am going to try and figure out how much supernormal profit she is making currently, and then I'm going to want to figure out how much total profit she's going to be making when she is pursuing revenue maximization, because it does still look like she's making a profit. So she is charging at her profit max point £17. It looks like her average costs down here are 8. That means she's making a per unit profit of £9. We're going to do then 9 times, looks like she's selling 25. And that's going to give me a profit of 225. I can do this pretty easily because 10 times 25 would be 250. And then I just subtract 25. Calculate the total profit at the revenue maximization point then is going to be what I want to do next. She's going to be charging, it looks like £12. here, it looks like her average costs have gone up, right? Because she's in a less efficient position. So it's gone up to 9. She's making £3 per unit sold. She is selling 36. Her output is increased to revenue max. Her profit then becomes £108. And then I want to find the change. So I'm going to take that 108. I'm going to subtract 225 because that was our starting position. And then I'm going to get negative 117 pounds. Now remember, always put the pound sign in. And that will give you 4 marks. Question B says, Emily now decides to change her objective from revenue maximization to sales maximization. This will lead to, A is a decrease in the number of customers. No, because again, the core focus with sales maximization is maximizing output, which is a little bit different from maximizing revenue, because generally you maximize output by decreasing prices. There will come a point where you are reducing your revenue while still increasing your number of customers. B says a decrease in the price of treatments. That sounds like it's correct. I'm going to circle it for now. You are generally going to want to cut prices in order to sell to more customers. C says an increase in productive efficiency. Probably not. Generally, in order to push that output, you're starting to rise up the average cost curve. You're getting sort of diminishing returns on your investments. So you're getting less productively efficient because you're more expensive to produce. D is an increase in the level of profit. Almost certainly not, right? Like you're reducing profit because you're raising your costs, lowering your prices to get your output up. So probably B is the correct answer here. 5 says the following graph shows the global sales of personal computers, PCs, between 2011 and 2015. So it looks like PCs have actually, we're selling fewer of them. A says the percentage decrease in sale of PCs between 2011 and 2015 is, we're going to want to find a change, right? So we're going to say 276.7 minus 352.4 over my starting value, which is 352.4 times 100, and that is going to give me 21.5% if I do the math. B says, we'll explain one likely reason for the decrease in the sales of PCs. So I might say the development of substitutes, phones and tablets. Why might consumers prefer those other devices? I might say something like computation power has increased in phones in these substitutes, making them capable of replacing laptops for some users. And then finally, the following table shows global PC sales by company in 2015. Calculate the 5-firm concentration ratio. So what I'm looking at then are the top 5 firms. So that's these: Lenovo, HP, Dell, Apple, and Acer. If I sum these up, I'm going to get 192.39 million. Because it's in millions, so 190,239 million. I'm then going to divide that by my total down here, which is 276,700 million. And that gives me a percentage, and I'm going to multiply by 100, and then that's going to give me a percentage of 68.8%, which is my 5-firm concentration ratio. Basically, a 5-firm concentration ratio is just what percentage of the market is controlled by those top 5 firms.